Let's walk through this step by step. We've got Bitcoin sitting right at that crucial $80,000 level, and this is where things get really interesting from a technical perspective. Let me break down what we're seeing across support, resistance, and volume so you can get the full picture. Starting with support, $80,000 is absolutely critical right now. This isn't just some random number, it's both psychological and technical support that's been tested multiple times. If we lose this level, the next meaningful support sits at $79,000. But that's probably not going to hold for long. The real test comes at $71,000, where we've got stronger historical support. Some models are even pointing to $56,000 to $57,000 as a potential floor if this rising wedge pattern plays out bearishly. That's where the smart money might be looking to add size if we get there. On the resistance side, $84,000 is our immediate ceiling. This level's been rejecting price action consistently, and it's also the upper boundary of what looks like a rising wedge formation. That's a bearish pattern if it plays out, so we need to see a clean break above $84,000 with conviction. If Bitcoin gets a proper weekly close above $84,500, we're looking at a quick move to $90,000. And that opens the door to $100,000 as our next major target. Volume-wise, the institutional flows are telling a completely different story than what the charts might suggest. We just saw 6 straight weeks of positive inflows into crypto products, with $857.9 million last week alone. That's the biggest jump since April. Bitcoin ETFs pulled in $706 million of that. And here's the kicker. Short Bitcoin products saw their largest outflow this year. That tells us bearish institutional bets are getting unwound aggressively. The positioning data shows institutions now hold 3.24 million Bitcoin across ETFs, corporations, and sovereigns. That's nearly equivalent to 20 years of new issuance, which is absolutely massive. Even retail demand is turning positive after being in the dumps, but we've also got some whale activity on the short side, with one hyper-liquid whale dropping $70 million on crypto and tech shorts. Looking at the liquidation map, there's some serious long liquidation fuel stacked up below 80,000, especially around 79,000, and then more significantly if we break 71,000. On the flip side, shorts are getting squeezed above 84,000, with clear liquidation zones at 85,000 and 90,000 that could fuel a fast move higher. The macro picture's got some mixed signals. CPI and PPI just hit multi-year highs, bringing back Fed rate hike concerns. But a growing Fed balance sheet and rising inflation could be long-term tailwinds for Bitcoin. The key thing to watch is this weekly close. If we hold above 80,000, bulls are defending the trend. If we break below with conviction, that rising wedge could play out and take us down to retest much lower levels. That sums it up.